Dinshaw Irani joins us now. And when markets are at an all-time high, you don't have to guess what Dinshaw would be doing. He would be smiling.
As always.
Okay, Dinshaw, there are two factors at play. One, the short term, which is from here to the election, which is 4th of June, and then what happens to the market after that. In last 3-4 days, we've seen a sizable comeback in the markets. Defense, railways, logistics, infrastructure, anything which has got to do with policy, that sector has seen a sizable rally. Do you think markets and some of these policy stocks are now priced to perfection and they're pricing in a near perfect election scenario?
So Nikunj, thank you for having me on your show, and a very good morning to you, your team and the viewers. So the fact is that we never took that into cognizance in the first place. What we were clear about was that we just need the government to continue. It didn't matter whether they came in with a 300 plus or a 400 plus kind of majority. All we needed was them to continue, and the continuity is what we were looking forward to. And I think more or less that is a given. I mean, we can keep arguing about the 2/3 majority and all that, but still, I think that is a given. Now, having said that, the PSU space that we are in is mainly the oil and gas space. Some of the banks are there with us, and obviously some of the defense players are there with us in the PSU space. So I think even if there was some amount of uncertainty, these spaces are quite sanguine. Probably oil and gas would have been a question mark. But still we believe that given that the budget is going to be in July, there's still a lot of steam left. Even after the election results are out, I think the run up to the budget should be good. Obviously, nobody needs any tinkering around with the capital gains taxes and stuff like that, where we hear a lot of sound bites coming out, right? So if that is out of the way, I don't see any problems in the space that we are in today. Frankly, I mean, this is the way forward for the government also, if they are looking at growing the economy and keeping the word of 5 trillion plus kind of GDP and stuff like that.
So, how do you see markets then reacting on 4th of June? They say you buy the rumor and sell the news. Could that be the scenario?
That could possibly be the case, but I mean, as you've rightly mentioned earlier also in one of your, I think just now that you were talking about, if it's a surprise to the market, I mean, if the seat count is far higher than what the market expects, and I don't think the market is expecting, by the way, a 400 plus kind of seat count. Okay, let's be very clear out here. I think the 300 plus is going to be a good one, enough for BJP. I'm saying in particular one particular party as such. Yeah, but if it's much higher than what the market is expecting, then I'm sure it's going to be a good rally even after the elections. Mind you, one thing that they need, why they need this kind of a majority is because land and labor reforms are the next set of reforms that needs to be undertaken. And in India, it's a state subject today. You need to convert it to a central subject. For that, you needed a massive majority to do that. But I don't think that's going to happen. But anyway, things are up in the air. Hope that happens at some point.
Yeah. Let's look at the other side of the fence, which is that what the global positioning is. Markets at an all-time high, I'm referring to developed markets and European markets. And FIIs are selling into India. Is this largely because of the election, or is this largely because of money moving out of emerging markets? And if elections are, if there is continuity of the government, do you expect this FII rampant selling actually to reverse?
So, okay, Nikunj, there are a couple of factors. Actually, the first one was obviously the uncertainty about what the elections are going to come out with. Obviously, there are quite a few rumors flying around. Every phase had a set of rumors. So that the FIIs don't like, right? So, but the second, I think the major issue, they could have even worked with this one, but the major issue was, I think, China. In fact, the sell-off started sometime in April itself, and that's when China came and said that, okay, I'm looking at pushing my economy, I'm looking at growth, and the way they're looking at growth is just exporting it out of the country. I mean, if you look at their domestic demand, it's still at a stretch. I mean, there's nothing happening on the domestic front itself. So that is what I think excited the foreign participants. And obviously, I mean, given the fact that India is already at a premium of 100% plus to China, the obvious move was to move some money out of India into China. And you saw the massive selling in May itself, up till yesterday rather. Yesterday was a good day for FII flows. But I think that is a matter of time. In fact, if you remember in 22 also, when China announced the opening up of their markets, I mean, when they came out of COVID rather, and they opened up the markets there, that was in October of 22, and probably by Feb, things started turning around there again. Reversal happened and money started coming back to India in March itself. So I think it's a matter of 3-4 months, not even that probably, given that the results are going to be out in June. You may see some reversal happening already, I suppose.
Hi, morning. Clearly there's been a party in a lot of these defense stocks and PSUs as well that have run up hard and fast. Do you think that there's still more legs to go?
Yeah, definitely. I mean, our belief is very clear in the defense space. We actually believe that India being a friendly country, it's going to be a matter of time before India becomes a sourcing base for defense. In fact, I won't be too surprised if the next PLIs come in that particular space as such. The fact is that the world is spending more on defense. This started immediately after, say, Russia and Ukraine tussle started. And then if this time around in the US, there's a change in the president. You can imagine what's going to happen to the NATO countries, because they're also going to be spending. Already they are doing that because they need to up their spends to 2% of their GDP, and they're probably at 1.5% on an average. So if that happens, you can see the amount of spends that come into the world markets in defense. And I believe India, being a friendly country, being a very malleable country, being good with everybody, I think that's going to be a sourcing base for us, apart from the indigenization that we're talking about in the country itself. So we remain quite gung-ho on defense.
One sector which has not really enjoyed the market momentum is banks. Technical factor could be FI selling. If one assumes that reverses, do you think the second half belongs to private banks?
Actually, Nikunj, our belief is quite firm on this one. In fact, we believe that this is the sector which will drive the markets from here onwards. Frankly, I mean, the sector hasn't done much for the last probably 3-4 years as such. But if you take away two of the big participants in the sector, which is probably Kotak and HDFC Bank, the sector has more or less performed along with the market, if you remove those from the index as such. Yeah. But still, if you look at prior to COVID period, the sector has done phenomenally well. It was 3x that of the market. I mean, I know these data points because we're working on a financial services fund, which we're going to launch very shortly. And that is why our belief is that this is, and that is where we're putting our money, in fact. And we believe that this is the sector for the next 3-4 years, which will really drive not only the markets, but also the economy needs that. If you're talking about the economy hitting 5 trillion and plus, you need the financial sector to fire. And fortunately in India, there's a lot of vibrancy in the sector as such. It's not only limited to banks. There are a lot of NBFCs, variety of NBFCs. There are exchanges listed, there are brokers listed, there are credit card companies. So it's going to be a fun time for financials, I suppose.
Oh yeah, absolutely, it's going to be. But Dinshaw, for the last 2 years that we've been interacting, you've bet on the premiumization theme, right? What the rich Indian consumer is consuming and aspiring to. But do you think the contra trade now is in the rural play, because that's where the recovery green shoots have just started kicking in?
So unfortunately, Aisha, in the rural space, the only players which you can really participate in a big way is FMCG guys, right? And frankly, I mean, we don't like the valuations out there. We cannot imagine ourselves buying some 50-60 PE companies which are going to grow at 11-12%, which actually the economy is going to grow at on a nominal basis, right? So there's no way you can, we will be doing that. Obviously, there'll be certain pockets which we'll look at some later point in time, but not as of today. And frankly, I mean, you need that part also, the rural part, to fire for the whole economy to move. But I mean, it's too early days for us today. I mean, In fact, if you remember, it was called out, I think, sometime 3 quarters back by Unilever also, that they're seeing some green shoots, but never transpired. And then they waited it out, and let's see how this works out.
So Dinshaw, if one looks at the current construct in terms of valuations versus opportunity, in terms of risk versus triggers, from here to next May, which is about a year, what are the chances that we could get a double-digit return?
Okay, that's a tough one. I won't even call out a return out here, but the fact is that there are quite a few hurdles in between, right? Election results is more or less, I think, done and dusted. Budget is one, which is going to be a big one. It all depends on that one. I mean, if they tinker around with the capital gains taxes in a big way, you'll see quite a few, I think, participants moving out. Definitely the FIIs, because India, though it has done fairly well in the last 25 years, 20 years, be it 15, 10 or 5 years, I mean, whichever time period you take. But the fact is that we're not too different from what S&P has done from 2008 onwards. If you apply a nominal tax, I mean nominal taxes on FIIs as such, you're taking away quite a few of the gains of the outperformance from them. And then what are we left with? We are at par with developed market returns. I don't think anybody would put risk money in emerging market when your returns are similar to that of developed markets, after taxes I'm talking about, right? So that is a big hurdle that one has to cross. If we cross that, I don't see a problem, but another big one would be the interest rates. I don't think the cycle has turned. Problem is the US, service inflation is rearing its head. So there's a few hurdles to be crossed. I think once they cross that, I don't see a problem India doing fairly well as compared to what the global markets would do.
It's going to be interesting times ahead with Dinshaw. Always good chatting with you. Thank you so much for taking the time out.
Thank you. It's always a pleasure.
If you like this video, then like, share and subscribe to ET Now.